welcome to the live Q&A webinar. My name is Danny and I will be giving you the webinar today. Before we will begin, as always, we gotta go through a quick sound check to ensure that the sound is in a proper level and this chart is visible for the audience. Therefore, I would like to ask you guys to use the question section at the bottom left to just comment that the sound is okay, and then we can proceed. In the meantime, we're going to have a nice overview about the structure of the webinar, the agenda, what will happen in every step. So initially, we'll have the previous questions. Those are common questions that our team has gathered from other webinars and previous live Q&A webinars. Then we'll have the dynamic questions, which are the true purpose of this webinar. This is, like I said, a live Q&A webinar. That means that it's a live questions and answers webinar. You're going to ask me questions through the chat, and then I can, through the question section, and then I will reply, hopefully with the best answer that I can provide. On the third part, it will be a bit more informative. I'm going to send you some links here. And lastly, the analysis. So it's a bonus. Usually questions are involved with analysis. It's one of the purposes of the webinar, but if we're not going to have it and we'll have spare time, so we're going to have a nice demonstration here regarding technical and fundamental analysis. Now, any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, recommendation, or a suggestion. Okay, now the webinar is recorded. So even if some of my explanations wasn't clear on the first time, or you just want to recap one of the things in your own free time, you can find it on our channel on YouTube. See it as many times as you want. It's also getting translated through through YouTube, right? When it's usually it takes a day or two, and then you can see it with subtitles. Sometimes it happens when I speak too swiftly. Okay, let me just make sure that the webinar is recorded as it's supposed to be, and then I'll be back and we will begin. Thank you very much. Okay, then everything looks aligned. Let's have a look at our questions, the previous questions, and see what we are having today. Previous webinar questions: how to make a trading plan. Oh, okay. What is margin and how do we use it? How to use execute when price hits. Oh, that's a pending order. Okay. How can I get, can I get mentorship from AvaTrade? Okay. Who can I contact if I get stuck with my strategy? Those are pretty good questions. Although I'm not really liking the order that they are aligned, because if I explain certain things, it might be easier to understand other things. Okay, let's begin with the trading plan. You know what? Let's give it a try and see. Perhaps we can do it by the linear order. Okay, who can tell me what is a trading plan, please? What is a trading plan? Everybody gotta have a plan. If I'm a beginner and I'm just gonna randomly click on things here, right? Click buy or sell or execute when price hits. This is the pending order that was referenced on the question. Okay, if I'm just gonna randomly click on things here, roughly is sure that I'm gonna get too far. I do need a plan. Question is, how do I make a trading plan? Can I place one cancels the other orders? I'm not really sure, Keith. If you can elaborate, Keith, that will be amazing. I'm not really sure I understand your question. Okay, how to make a trading plan. So a trading plan needs to include several things, right? Trading plan need to have goals, What else? If I don't have any goals, so what exactly my satisfaction from the trading? Let's suppose I make $1 every week. Does that sound like a good plan? Not really, right? And if I make $1 in an hour, well, it's not even too much, but let's say $100 in an hour, it's not really bad, right? So goals, times. I also need to know when I'm planning to trade. If I'm just randomly open my platform and open a trade without any analysis. Okay, so analysis. What else? So we have goals, we have time, we have analysis. What else? What else could, oops, I think I wrote it down. What else? Goals, times, analysis. What do I mean by time? Available time, right? If I don't dedicate certain times to sit and analyze and do risk money management, that's another thing that we're going to put down. Okay, risk money management is one of the things, one of the important things. Then what will happen is, even if I have the goals and the times and the analysis, then without proper risk money management, I can accidentally wipe out the account. Okay, we also have to understand that with all the respect to the good sides and the profits and all of that and the success, there is also the other side, which means that we can potentially lose. As much as we can gain, we can always lose, right? This is why we also have stop loss and take profit. So we're going to put another thing that is not really mentioned, it's not really popular, but plan B. That means I plan to do ABC. That didn't go as I planned. So now I can get stuck. There was a question here, right? There was a question here. Then I can get stuck, you see? That means, well, this is with a strategy. It's a bit different than a plan, but anyway, those things needs to be included in a plan, okay? In a trading plan. That means that, for instance, my goal on monthly basis is, let's take a round number, let's say $4,000. Okay, monthly, that comes down to $1,000. Weekly, let's say I trade 4 days a week, that comes down to 4 days, right? Now, how is this even helpful? How is this even helpful? Because if my, let's say, annual goal would be 50,000, well, I multiply 4 by 12. It's not really 50, it's 48, but never mind. Let's say 48. Okay. Now, okay, if I want to make $50,000, it sounds like, oh, whoa, $50,000. But if it comes down to 4,000 monthly, and then 1,000 weekly, and then 250 daily on 4 days, then I can construct the position in a way that makes sense. And I have a plan. I know, okay, as long as I sustain this profit, and as long as I sustain that profit, then I can get to my goal, right? If I have those things, I'm more directed. Okay, let's use as an example. Right now we're looking at, oh, by the way, I always forget to mention, because for me it's so natural. This is the web trader, okay? This is a platform that it's embedded in the website. It's super comfortable. You don't have to download anything. It's embedded on your account through the website. So if you just log in with your email and password, you're supposed to be here. If you're looking at something else, you might want to contact the customer service, which is reachable. Well, if you can get to here, so obviously this function is not easy to get. But if it looks different, you can contact the customer service through an email. Let me just show you the email here. Hold on. cs@avatrade.com. Okay, and they will fix it for you, either them or your account manager. And then you're going to see the web trader, the lovely platform that we're looking at right now, which, like I said, doesn't need to be downloaded or installed. Yeah, and by default it comes with a currency. I don't know if you noticed, but I did several things to make it look a bit different. One of the things is I clicked on the two tiny arrows to the upper right, and then if I click sell or buy, it's going to open the sidebar to the right. Now I can expand it again and enjoy the chart with it to the side. And the way that I did it is so I can, the reason that I did it is so I can see the list here. Okay, if I want to hover and pick manually one of the crosses or one of the commodities or one of the stocks, but the stocks are closed at the moment. So we're going to play with the commodities or the energies, perhaps. I think last time we had, yesterday we had platinum. Today we're going to go with corn or with coffee. Yeah, coffee, why not? Everybody likes coffee, right? Every once in a while. Oh, it seems like it's blossoming. You see how there's a nice question coming from Keith. Okay, following. Just a second, I have to do something with my screen to read it. Just a second. Doesn't really let me stretch the question section, and then it's very difficult. Hold on, I'll try and copy and paste it. It's used when I believe there is going to be significant market move, but not sure which direction. So I placed two pending orders, one long, one short, which is triggered, the other pending and be automatically canceled, just leaving the one triggered. It won't say. I see. Well, the best way to do it, you know what, let me grab this question and just paste it on the where it's supposed to be, but I'll have to recompose some of it. I have to tell you, Keith, just so it will be, you know, easier for the audience to comprehend, and maybe for me as well. Just a second. The size here is 15. Sorry guys, sometimes the presentation gets a little messy, so I have to construct it a little bit different. Okay. Okay. Let's get this part. The other part I pretty much understood. We'll give it a shot. We'll see how it goes. Okay then. This is thank you, Keith, for the wonderful question. Thank you. We're gonna get to that in a minute. Well, not in a minute. As soon as we finish a few things here. Where was I? Yeah, with the trading plan. Okay, so to design a position, you have many variations. One of the variations is taking a single unit over, well, we can't do that. Who knows why we can't take a single unit with coffee? Is something wrong here with the platform? God forbid. But this is a riddle that doesn't fit for necessarily for beginners, right? It's more for intermediate or advanced. Who knows what's the issue here that doesn't let me choose a single unit? Let me try it with the lot size. Perhaps it would make more sense. Now, why did that work and that didn't work? Because this contract is for 1,000 units. Now, when I suggest the platform to go with the minimum lot size, which is a percent of the lot, that's going to take 10. Let me show you again. If one lot equals 1,000 and 10% equals 100, that means that 1%, which is the bare minimum, is 10. And this is why when I tried, he didn't let me do it, right? Okay, let's carry on. It's just something, some educational treat. Okay, it's not really mandatory for what we're doing now. But let's go with 10. Okay, so let's suppose I have 10. My weekly goal is, oh sorry, my daily goal is 250. Okay, perfect. How do I make 250 with 10? Okay, how do I do it, guys? I need $25, right? I'm looking at the bare minimum. I need 25 to get to 10. How? Because 250, let's, you know what, let's design it in a way that will make sense for us. Goal, time, movements, and units. The goal is 250. The time is 1 day. The movements we still don't know. And we decided to go with the bare minimum, which is 10. Movements are question mark. Let's apply something called ATR. And with the ATR, we're going to see what's the occasion movement per day, right? The way that I did it, guys, is I just click here on the indicators, then I clicked and drag it to here. It's one of the accelerators, and I kept the Wheeler's Laugh and ATR packs for 1. So that means it's going to measure here and tell me, Danny, each day coffee approximate to move 3.6776. Now, as I said, if I go with a bare minimum, which is 10, which is 10 units, and I want to make 250 quid per day, that means that I need, let's do this exercise, goal divided by units equals movements, and goal divided by movements equals units. Let me show you. No need to panic. Okay, no need to panic. Then he's going to show you everything in a second. Okay, and let's see if it's in the range. Guys, if I expect $25, is it in the range or not? Look at the look at what's written here, right? You don't have to be an expert just to know that the average movement is 3.6. Hold on, Danny, but the 3.6, where did that came from? From the ATR. That's correct. But where did it came from? How the ATR was able to grasp that figure? Right? So the way that it did it is it took, I'm just going to click here on the crosshair. Otherwise, I get nothing. You see? With no crosshair, nothing happens. With crosshair, everything is okay. So the way that it did it, the ATR, is it took the differences. It took the laugh from the bottom to the top, and it just measured 14 candles. One by one, it measured 14 candles, okay, and it accumulated to that figure, telling us 3.6 is the approximate movement per day, because we're looking at days. If it's been a week, so it would have been higher. Okay, so if I'm with 10 and I understand that 3.6 is the average, going by the average, I can make, how much can I make? 3.6. That's barely, it's not even well, it's a little more than 10%, maybe 15%. Never mind, but it's not even close to 250. So let's go instead of 10 with 100. Okay, how many? And so let increase as well. Let's divide 250 by 100. How many do we need, guys? How many units? Sorry, how much? What's the price difference do we need? How many movements? 2.5. Is 2.5 in the range or out of the range? That's in the range. So 2.5 out of 177 is approximately here. Okay, or here, or here. Yeah, somewhere here. Okay, let's change it to a cell for the sake of the discussion and place 175. Just to set Oh, sorry, that needs to be changed to 100. There we go. Okay, that's a little more than that because, like I said, I wasn't precise on the numbers. If I'll be precise, it will be precise as well. But as you can see, 270 is very close to 250, and that's very good. Now, this is one of the variations that I can have. For instance, I can do the same exercise a little bit different, right? But I can do the same exercise with wheat. You see, I already have it applied. Let's go with a bare minimum. This time it's going to let us do with 1. Okay, and with 1 to make 250, I will need $250. I'm looking in the range. The range is not even close. I'll make it 10. Now, as we saw, 10 requires 25. I'm looking at the range. Once again, it's 10 is not even close. Let's increase it to 100. Now I need 2.5. 2.5 is in the range. But I understand that 2.5 is way below the range. So what can I do? What can I do, guys? I can just reduce it to 50. I can play with it till I reach the variation that I need. Okay, so 50 multiplied 10 is 500. Still, I can lower it a little bit more. 25 multiplied 10 is 250, which is exactly what we want. So 582. Okay, that makes it 572. Danny, how did you come up with this number? Because, guys, this is my average. And if I go by the average, 582 minus 10 is 572. Okay, and in this variation, we have 25 multiplied 10. So we're going to change 250 to 25. The answer is, oh, sorry, to 10. The answer is 25, which is our movement. Okay. Okay, right. So this is one variation. Now I don't have to do this exercise in each and every position. I can, and it lets me be very organized. And then I can also determine, was there a question here about execute when price hits? Okay. Okay, so the trading plan, I think we pretty much covered that. That is the margin and how to use it. I want to take advantage of what's written here to explain about the execute when price hits. Can I? Okay, those are pretty non-related to what I'm showing, but how to make a trading plan. Let's just put the answer here. Trading plan needs to be needs include goals, times, those are all examples, right? Goals, time, analysis. What else did we write here? Risk money management. Just pretty much the plan B risk. Okay. Now again, this is not a rule that if you have all of those things, you're going to make money for sure. It needs to be adjusted. It needs to suit your ambitions. It takes time to make a plan, right? If you make it in a minute. Okay, what is margin and how to use it? Who knows what is margin, guys? Oh, this is what I wanted. I wanted to show how to use this before we carry on. Let me just put down there. How to use execute when price hits. And the reason that I'm showing it to you now is because we're already in a very good point to show that. Guys, you think that the price now that we're having Is it suitable for a sell or for a buy? Or it's not suitable at all, and then perhaps we should wait. Is, how can I rephrase it? Is it a good price to buy or sell? Is now a good place to buy or sell? What do you think, guys? Look at the situation we're having here. We have 3 bulls and 1 bear for the past 3 days, right? We have 3 bulls, 3 positive candles. Bulls means like a bull who's lifting it to the air, right? Bear means down because the bear slams his opponent to the ground. Anyway, never mind. We have 2 going up, 1 going down. Okay, Keith here is saying to wait. Everybody else thinks also the same, to wait, or somebody thinks that this is a good place to sell or buy. Anybody else? Michael, I didn't do anything. Well, oh, you wouldn't do anything. Okay, you wouldn't do anything. I understand. So that means to wait. Okay, to wait. Now, if we plan to wait, and for instance, we believe as an example that this situation here is still going up. You know what? Let's assume that it's still going up. We have something called support and resistance. One is here, one is here. Okay, and I used, oh sorry, maybe I've done it a little too fast. This one here, okay, is very close. As you can see, the 590 mark. We also have here something in between, but I don't want to mislead anyone. We have 590, 594, and 598. That according to this, that according to that, and the higher one is also an indication based on this candle. So we have 3 points. And in this case, I can assume that wheat will turn around because of the variation of this candle. Why there is this thin area when the rest of the candle is colored? What's so special about that area? Anybody knows? Here? What is this thin part? Anybody knows what is this thin part here? The candle, why it doesn't look green like the rest of the candle? And in here, we also have it. Let's use the rectangle for that one. Guys, I gotta know, what are those things that I've marked in the yellow rectangle and the yellow oval? Prices that wheat has gone through and went back, right? So I can assume that it will turn around that area. I might be wrong, but I have a reason to believe it might. So if I think that this is a sell, but I'm too afraid, I don't want to sell now, I think it still has intraday movement. Could be. Very nice. So if I have a reason to believe it will turn around, but I'm too scared to do it this way because I know it still has potential to to carry on. Just a second, guys. If I still think it has potential to carry on going up, and I believe that there will be a reversal between 590 to 598. Let's get rid of that one for now. Okay, if I believe, what can I do? What can I do to take advantage? In which best way I could take advantage of this situation? That I think somewhere in between could be a reversal. And let me just also bold a little bit my question. I don't want to wait next to the computer. I don't want to sit down and wait for that to happen. Okay, I want to do something that if it will happen, great. If it doesn't happen, you know what? I'm not gonna, nothing bad will happen. So how do I do it? There is a tiny order here called, I'm sure that people already familiar with take profit and stop loss. The way that it works is this way. I can choose, if I click on the take profit, I can choose the price for me to close the position with the profit. So if I took a buy and I aim it to go higher, I can just close it automatically. The platform is going to remember this price. Or if I click on the stop loss, it's going to let me close the position with a loss, okay, preventing it from going any further down against me. And in this case, how can I take advantage? What I'm going to do is use execute when price hits, and instead of selling it here, I can sell it here somewhere, right? In the middle of the trend. And then this can become my potential stop loss. And the price that we're having now can be my potential take profit as an example, or maybe even here. And then what happens is I'll have a position. Let me see if I can show it to you. 594. Okay, and then I go with a sell. Oh, reset everything. Yeah, I had a feeling. Take profit, let's mark it 580. Then I have stop loss 598 as an example. Look what a nice position I can compose here. Potential gain 225. That's almost as much as we wanted to make. And the loss is 45. It's less than 5% from my account, right? Oh, sorry. Yeah, 1% is 10. Yeah, it's less than 5%. It's, no, sorry, 10% is 1,000. Oh, I confused myself. I'm sorry, guys. 1% is 100. That's 0.5%. It's not 5%. My bad. Okay, in this case, if I click sell, watch what happens. Then I'm going to go to my orders. If it happens, great. Like we said, in this scenario, it's already marked on the chart. Just a second. Let's go back to wheat. And oh, if I do that, it's going to erase all the nice things that we had. So I'd rather show it to you here, okay? No, it's not going to show us here. It should show. It should show, yeah, exactly. You see, this is the trigger price. It can get to here. Then my, oh, but I must get rid of the, there we go. In this scenario, what happens is I have the trigger price, I have the take profit, I have the stop loss. This could be a well-composed position. Okay, at a minute, we don't really need it, so we're going to cancel it. Sorry, let's go back to wheat. There you go. Okay, so this is how I do it. This is how I do it, guys. I just click here X. Nothing happened. Okay, let's go back to wheat. The problem is that I have to go back to wheat, but we're getting used to it. Okay, now the next question. So this is how you can use it. It's simple as that. I'm not going to expand too much because I have other questions to attend. But the way that we're using it is very, very simple. Maybe perhaps I should just give a word about it. Is a pending order that allows you to execute position in a potential future price automatically. Yes. And let's see what else is here. This is pretty easy. This one, oh yeah. Well, I I didn't want to waste time on that, so I'm just gonna put here customer service and senior. Oh well, account manager. And I gotta say that the mentorship can also be addressed to the senior account manager, but maybe I'll give a little more. I'll explain a little more about it in a second. Let's get to the margin question. What is margin and how do we use it? Okay, let's carry on with wheat presently. So the price for wheat now is 583.5. That means that this is how much one unit cost. One single unit of wheat, this is how much it cost. You don't believe me, you can see it for yourself. Hey, Danny, but the value is higher. Yes, that's correct, because the buy is always higher than the sell. The reason is the spread. There is a spread. You see, the difference here is almost $1. To be precise, 75 cents. Okay, always what there is the bid and there is the ask. So this is what I have to pay. When I sell in a lower price. That means that I need to reach the buy price to take profit. And when I buy, I need to reach the sell price. Okay, the reason is, again, the spread. Okay, I must overcome that segment in my first initial steps to make profits. First, I have to cover the spread that will be charged in each and every position. It's a fractional, not really, you see what it's written here, it's less than $1 per unit. So let's suppose I take just a single unit. Single unit cost 183 quid. Well, this comparison is not something that I entirely believe in, because then the leverage, let's make it 5 units, okay? Let's make it 5 units. So you'll see the difference between the margin, because if I'll use 10 as an example, you see it comes back to the same price. Okay, so I'm applying with 1. I don't want it to confuse you. Let's go with 5. So 5 units worth $2,017. You don't believe me? Let's do this together. 580 is, yeah. Okay, multiply 5. There we go. Okay, so you see that the value is 2,917. Now there is something called leverage. What the leverage does is it multiplies buying and selling power. Oh, sorry. Meaning that my balance will behave as if it has 10 times more than what I actually have. I have 10,000, the leverage allows me to behave as if I had 100. It's not entirely true, because I have to hold a little collateral in my account to do that. That collateral is called margin. The margin is an interpretation between your balance through the leverage. That means margin impact. That means I have to divide the value by the leverage. Something doesn't make sense. Hold on. No, it does. It's fine. That means that I only need 291 instead of 2,917. Well, the price keep on fluctuating, but you see that the formula stays the same. Okay, this is very, very simple. That means that the margin is the interpretation of my balance multiplied by the leverage. Okay, I don't have enough money to buy the position. Actually, I do. Let's make it impossible. You see, now I don't have enough money to buy the position. I don't, but I have enough margin. I have enough margin thanks to the leverage. Without the leverage, I would need 30,000. With the leverage, I only need almost 3,000. 10 times less. 10 times less. Remember this formula. You divide the value by the leverage to know the margin impact. And the margin is the floating available fuel in your account to sustain the positions, to acquire positions. Again, you see, I don't have enough money, but I have enough margin. This is a great way to sing it, to remember. Okay then. So, what is margin and how to use it? Margin is the interpretation between your balance to your leverage. Let's just say that it's converted through your leverage. Okay, margin is your balance multiplied through the leverage. Sure. Let's make it 10. Okay, there we go, guys. Oh yeah, the mentorship also. Yeah, the mentorship is not something that we're offering as a product, but you can absolutely get personal assistance through the journey from your senior account manager. So I'm gonna write here, senior account manager can assist with strategy, plan, and mentorship. Okay, they're not going to tell you how to trade and what to trade and give you a specific financial advice, but I can reply to questions, okay, and they can give you a nice overview on certain things. Okay, but they're not allowed to give you financial advice. Okay. When I believe, yes. So we're going to get to Keith's question. When I believe there is going to be significant market move, but not sure which direction. So I place 2 pending orders, 1 long, 1 short. When one is triggered, the other pending trade, I'd rather automatically canceled. I'm gonna take a wild guess here. You tell me if I'm right or wrong. You don't know exactly where the market is heading, so you double your chances with sell and buy, but you would rather cancel one of them if you'd rather cancel one of them that was losing, right? One sell, one buy. If the buy is losing, you'd rather automatically close the buy and you carry on with the sell and vice versa. Did my guess hit the bullseye, or I wasn't accurate here? Excellent. So the way that we're gonna do it, the way that we are going to do that is with, where is my mouse? There we go. The way that we are going to sort that out is using the actual pending order that I showed a minute ago, which is execute when price hits and stop loss and take profit. Now, and also I'm gonna give you a piece of advice that I hope you're not gonna get upset. You see, the way that I'm designing my sell and the way that I'm designing my buy can be similar, but it can be similar to the other side. Let me, you know what, instead of my fairy tales, let me just, maybe I can find you a signal that is already. Yeah, so one of the things that we added recently, guys, it's pretty amazing. I'm not gonna lie to you, you should use it, is the signals. Okay, you can use it as frequent as you want. The way that it works is extremely simple. You're just gonna pick one of the things that we have on a list. Okay, what's happening here? Oh yeah, you gotta make sure that this is daily and those are minutes. Let's switch to days. Okay, and then what happens here is it's already showing you the support and resistance. So if, for instance, I'm gonna go for the buy, you see that the take profit and stop loss are 481. 481 is approximately here, a little lower, and 473. Okay, this one in the buy scenario is a profit, right? This one in a sell scenario is a stop loss. Can you, Keith, I hope that you're looking at the screen now. Can you see what happens with the sell scenario? Can you see the comparison? Take profit 473, stop loss 481. And that's the mirroring vice versa for the buy. Are you looking at it? Can everybody see that? Can everybody see what's happening here? So if, for instance, you don't like the buy scenario, well, what you want to, the only difference between this, you know what, let me show you. The only difference is that in this scenario, they didn't use the execute when price hits, but you, sir, can do it. So what can you do? You can use this execute when price hits for the buy scenario. You can use it for the sell scenario, and then you're going to have the buy and the sell, and you can automatically cancel which one you don't want. How do you do it? With a stop loss. Because we said that the stop loss, the purpose of it is to close the position because, well, when you don't want to lose anymore. So you can place it in advance with the execute when price hits, and if it exceed a certain point, it's going to close automatically. Okay, is that a good solution? In the meantime, I'm going to share with you some links that we have here. One of them is for the Education Center, which, to be frank, guys, can be addressed through the same interface, which is here at the bottom left. You see tutorials and videos. What happens if I click tutorials? I have all kind of things. Okay, and say apply for the Academy. You will lose every time. No. How can it be that I will lose every time? Listen. Look. Let's suppose, but let me first send the links. Let me first send the links, and then I will show you. Just a second. This is gonna be sent. Where is the chat? I used to have. Oh, there we go. So this is the AvaEducation link, which is pretty amazing. As I showed, it can be addressed through the website itself as well. This is to log in and make a deposit. Did I send it? Okay. FAQ in the help center. You need to cancel the non-trigger trade. Need to cancel the non-trigger trade. Well, you can, but you can never know. The thing is, Keith, you can never know if you're gonna make profit or loss for the long run. This is for the real account. I'll show you what I mean in a minute. And this is for the Academy. Now, let's suppose that I go with what you're saying. Let's suppose there is a sell, there is a buy, okay? Buy, sell. And I took it somewhere here, okay? And I have the buy scenario. The buy scenario means that I'm gonna keep, okay, let's suppose that it turned around, right? Let's make it red. Now, if it started declining, okay, and I close my buy position because, well, there's no reason to keep it, allegedly, right? So what can happen is it will go down a little bit and then it will go even higher, right? So that means that I close it for no reason because I could have made profits on my buy. If it went up, okay, and well, I closed my sell position, then what can happen is it will go high a little, it will go a little higher, then it will go down. So my first impression from the positions going on up or down doesn't mean anything. It doesn't mean anything. You know why? Let me show you why. Let me show you why. Just a second. I want to find a nice candle to do that with. Let's take this candle as an example, okay? This candle here. The 13th, but let's see if we can find something a little higher. Let's take that one, okay? Let's play with that one. I want to show you why you can't really rely purely on the market first. What did I do? It was here, right? I hope so. The 17th. Let's see. Yeah. It looks pretty good. Okay. It's the same day. Yeah. Okay. Can you, Keith, I hope that you're looking here. Can you see what happened on that day? Look how it started. It started declining. It went a little higher, right? And then it started declining again, went a little lower, and then look where it ended. So look at the fluctuations here. If I would see bearish, I would think, hold on, I'm going to close the trade, right? If I'm with a buy, I'm going to close the trade. But I can close it here and make profit. Okay? And as you can see, it went even lower than that. So that means that there are always fluctuations, always. So I shouldn't rely on the exact same moment that I'm taking the position because things can change. And as I explained in the beginning of the webinar, we also have the spread to overcome. This spread makes you open the position and start with a minus. So if you have if you get cold feet, if you took the position and right away you change your mind, well, you should know that things can change. And I'm showing you here, can show you even in a more aggressive way, even though I don't have a lot of time, but I'll do my best to do that. Look at this crazy candle here, okay? You know what happened on that week? You want me to tell you what happened on that week? Anybody knows what happened on that week? I don't remember. I'm not that historical genius, but I can tell you just by looking at it. Anybody knows what happened on that week? We're looking at weeks, right? What happened here, guys, is extremely simple. It went all the way up, all the way here, but where did it close? Initially, it went down, though. I have to tell you, yeah. Don't be surprised. This candle started bearish. This candle started bearish, but the way that it worked. How can I know that, though? Ukraine. There you go. There you go. Some people here are more historical than me, but the thing is that the first steps doesn't guarantee any continuation. It just doesn't. Okay. This is why we have a very aggressive reversed hammer. Okay, as you can see, such a big handle, and yeah, does it make sense? Everybody understood what I've explained here? Because this might be a little advanced. I'm not sure if everybody can understand that. But I hope it helped. I hope that my explanation helps. This is why I always say capture the time, capture the time, capture the time. The direction doesn't mean anything because it keeps on changing. You schedule a direction, you gotta aim a certain, well, specification. Just the direction by itself, it keeps on changing. Look how fast it happens. Look, I'm changing to 1 minute, right? This is 1 minute. Can you understand how fast the market is moving? But like I said, those are minutes. So I'm not really bothered if I'm intraday or weekly or even swing. What is swing? Anybody knows what is swing trading? So swing, that means if I'm looking at the situation we're having now, and I have, let's say, 50,000 or 100,000 in the account, and I want to keep the position for the next 6 months. Okay? I'm not going to be bothered what's happening in the next minute or two. I'm just not bothered unless there is, I don't know, some major fundamental that really shook the market. Yeah, exactly, days or weeks. So unless I find anything, like I said, fundamental that shook the market in a way that also shows in minutes a crazy movement, which happens sometimes, I'm not really bothered. Okay, and the way that I'm going to overview the market is not from 582 to 585, is actually from 582 to God knows, to much higher point, because my picture is bigger. Another nice rule to follow, the closer you get, the smaller time frame you analyze, the smaller the picture you see. The bigger the time frame, the larger the picture. You see here I have years and whatnot, and if I'll go back to days, I only see, and I can minimize and maximize the picture with the wheel on my mouse. Yeah, I hope it makes sense. And of course, if I said that the bigger the time frame, the bigger the picture, and I don't understand certain things, like this guy is an example, so I can mark it with a date, and then I can pick it specifically and analyze it by its days, because in each week I have several days. But I have to I have to click and drag a little bit. Never mind, guys. Unfortunately, we're out of time. I'm gonna give you the gift, the nice little one-on-one premium market review, a special promotion code. You should give it to your account manager, and then he can give you the promotion. Yeah, that's it. I hope you enjoyed. Thank you for the people who helped me through the questions and answers. I appreciate it. And that's it. I wish you all a great week full of profits, and I'll see you in a week from now. So best of luck and have a good day.